Hey, TGO traders and investors, welcome to Tuesday's Sit Rep. And not much going on in the market, except that we're at freaking all-time highs. Who cares? Guys, I got to be brutally honest with you. When it makes it on the front page of the Drudge Report, you know it's time to sell. This is just the market is full of emotion, folks, okay? The market is full of people like you and I. They wanted to push this thing all the way up to where it is. Now, what do we do? Right? Druckenmiller, great interview on CNBC this morning. Couldn't agree more with this guy. He and I agreed that the sequester was going to be a yawn. We are really in the seventh or eighth inning of this market. And the last time, we were around this level, it got ugly. We had an ugly ride after it, right? Great. Take a look at zerohedge.com and this article right here talking about, the Dow back then. Last time we hit 1416, 14164.5, right? Gas back then, 275, now 373. GDP growth back then was 2.5%. Remember those great days when we thought that was low? We're at 1.6. Look at this. Americans unemployed in the labor force, 6.7 million, now 13.2. I could go on and on. Look at this. Food stamps. Back then, 26.9 million, now nearly 48 million. The Fed's balance sheet, not even $1 trillion. Now we're going to be north of $4 trillion by the time this guy gets done. Seriously? Seriously, folks. Look at some of these numbers and let me know that, yeah, it's time to jump in and put some new money to work here. It obviously is built on pipe cleaners, rubber bands, and a paperclip. This is the MacGyver market, and it's going to end badly. And oh, by the way, also on the front page of the Drudge Report is about Netanyahu saying on Monday that Iran's pretty close to the red line, and we're getting pretty close here, right? This is getting ugly. So the market, again, doesn't care about things until they care about it. Comedy Central, CNBC, they got their Dow at all-time high hats. Kramer, I'm sure, is going to have a special. Kudlow's going to have a special. They're going to trot out guess that this market can go higher. I am telling you right now that this market is long in the tooth and way, way overbought. But I'm trading the hell out of it, guys. We closed in our primary live trade brief this morning, we closed a trade on SDS that made 215% in a week. 215% a week, about $2,000. A double vertical on SDS. As the market goes up, the SDS goes down. So put a bullish double vertical spread on SDS that returned 215% in a week. So don't get me wrong, guys. I mean, I believe that this thing's going to implode and it's going to end badly, just horribly, but I'm going to trade the hell out of it, right? You can't fight the Fed, and I don't plan on fighting the Fed. I plan on trading the hell out of the Fed. But Friday night, guys, the Bernanke gave a speech in San Francisco at 9 in California, 10 on the East Coast. So, of course, nobody knows what the hell happened. He said, you ready for this? Using stronger language than he did earlier this week. What's that mean? That means the guy's a coward. I'm not going to mince words. He's a coward. That means he sat in front of the Senate and the House and pulled his punches. But after a couple glasses of Chardonnay out in San Francisco, here's what he said. Using stronger language than he did earlier this week, Mr. Bernanke addressed concerns that the long period of ultra-low interest rates may be fueling excessive risk-taking and overheating in certain corners of the credit markets. Translation, yeah, me doing this to the market has led to excessive risk-taking. The fact that my mom can't go to the bank and get a CD. She's got to pay the bank, essentially, for a CD. You're forcing people into risky assets. Sound familiar, folks? Yeah. And markets tend to go down a hell of a lot faster than they go up. Okay? So we're off the highs. We were up 150 points. The SPOOs were up 16, 17 points or whatever. Google, all-time highs. Yay. Pop the champagne cork. Have the Muppets on CNBC, keep squawking. But guys, no institutional money that I know, if I was running $1 billion hedge fund, I would not be putting new money to work in this market right now. I'd be sitting on my hands because guess what? Now that we're at all-time highs, what's the next catalyst? We've gotten to a floor, right? This elevator's gone up to an all-time high. The doors opened up. We piled out with CNBC cameras, and everybody's ready to take a shot. Okay, go. Action. Okay, well, this floor isn't finished. Okay, well, what's next? I mean, well, guess what's next? In about 2.5 weeks is going to be the Boehner-Obama-Harry Reid fight, the rumble in the Beltway that's going to shake these markets. So what's next is not another leg up, in my opinion. It's going to be a significant pullback, 5, 8, maybe 10%, okay? But I will tell you guys, and I'm going to trade the hell out of this, and if you want to know how I'm going to trade it and do really well like we have been doing, you need to get on board with us. But this is exactly what's going to happen. You ready? There's the, here's the fiscal cliff. That was a non-event. Nice little pullback. I'm sorry. This is Goog. 1 second here. I was looking at the SPX. I'm like, that doesn't make sense. Now we're making sense. Here we go. Here we go. There's the non-event of the fiscal cliff. There's the non-event of the sequester. And the market just keeps going higher and higher. So we'll have a significant pullback, guys. But it's going to be used as a buying opportunity. It's going to be used as a buying opportunity until the Bernanke says everybody out of the pool. And then it's going to be really ugly. And the Bernanke is already signaling that eventually caddy hour, remember Caddyshack? A caddy hour is going to end. And everybody is going to be forced out of the pool. Until that time, we're going to trade it like crazy. Keep an eye on Friday, guys. Friday is a big day, the jobs report number. And get ready for Bizarro World, okay? Here's what I'm talking about. On Friday, if the jobs number comes in good, the market crashes. I'm not going to say crash. The market retreats. What are you talking about? A good unemployment numbers is good for the economy. Nope. Good unemployment numbers means the Bernanke can be 1 month closer to pulling the punch bowl away from the drunks on Wall Street. Bad unemployment numbers will be good for the market. So again, you have got to think inverted when you're trading this market, okay? And if that doesn't make any sense to you, you have got to get on board Top Gun Options and see how we're trading this market, okay? Because it really is Bizarro World to most retail traders. It ain't to me. It's like the Matrix. I'm Neo, and I can see exactly what's going on, and that's why our performance is so good in all of our model portfolios. We're having an absolute blast, okay? So I got to run. Got a lot of trading to do. A lot of good stuff going on in the markets. I'll be back with tomorrow's Sit Rep. Happy hunting. Make sure you hedge. We'll see you.